where small business and individual have a limited access to banking service. Chain banking, which is nothing but the chain is extending, the bank is extending using a chain circle, which is based on the small city or rural base when you are trying to extend your bank, which is called one represented unit. The area population is very less, so instead of opening a branch, you are trying to start one unit, so the local coverage will be very limited. Hello everyone, a warm welcome to one and all. I am Natesh, lecturer in Commerce, Vidhyaashram, First Grade College, MYSURU, the Temple of Excellence. We are in the Unit 1, Session 3, second semester, BCom Law and Practice of Banking. So, which is the first unit, Introductions to Banking. So, and today my agenda, in the last two session, which is based on the classification of bank, which is continuous section. Unit banking, group banking, chain banking, mixed banking, narrow banking, universal banking, offshore banking. Okay, moving forward one by one. So first one, unit bank, the name only it is suggesting, which is a small unit. Okay, so which is based on the small city or rural base when you are trying to extend your bank, which is called one represented unit. Okay, unit bank is a banking system. Under banking system only the unit banking is established. Which is a single bank operator as an independent unit. Independent unit. For example, if you want to extend your small unit, one rural area, so which is the best example, without having any branch or affiliation with other bank. So here we are not finding any specific branch. We are finding one unit. So it is also known as single banking, which is also known as single banking, and objective to promote local development, the local area promote. Okay, so there are too many customers you can attract, and to ensure personalizing service, because the customers are expecting a personalized service, which is more benefit for the customers. And last one, to ensure the stability, you need to maintain the stability. And the scope, limited geographical area, only limited area we are trying to go for keeping one unit bank. And next one, limited service, only specific service only we are giving. And limited customer bases. So because the area population is very less, so instead of opening a branch, you are trying to start one unit, so the local coverage will be very limited. So the limited capital basis, because number of customers are few, so that's why the capital formation also very low. And going further, so group banking, so here it is a group banking. So for example, now you know there are too many banks are merging together, operating in the one, for example SBM, SBI together, so now they made for group, right? So here meaning the group banking is a concept where group of bank or financial institution come together to provide range of banking service to their customer. Because see, the group of bank, syndicate, Canara Bank and a few other bank, Punjab National, so all together they are operating, right? So here also same thing, under Bank of Baroda there are too many banks are grouped together, so they are operating the same operation. So this concept often used to developing country. Okay, again recently only in India we find there are too many banks are merging together, they made group. Okay, where small business and individual have a limited access to banking service. Okay, so there is a limited access we are finding. Objective, the primary objective of the group banking is to provide a banking service. Even individual banking without having a group, so the same service also they are providing. Here also after group, the same service can be carried forward to underserved population. Okay, so group banking can also help to reduce the cost of providing banking service. There are cost of the expenditure, cost of operation, cost of activity will be cut down, which can be passed on the customers to form of the lower fees and interest charge. So which is actually every business are generating with the accepting a deposit, they are providing an interest, and the same thing when they are lending a loan, they are collecting interest. So because they want to meet a day-to-day expenditure, Okay, so the scope of the group banking is vast and can be include variety of financial product in the financial banking, which is related to financial sector. So coming under the financial sector, they are offering a financial product. So the financial product, if you take examples, the insurance premium, okay, or investment part, or they are offering credit card, debit card, the facility what they are providing, and service. Some of these services that can be offered through the group banking include saving account, loan, one kind of product, saving account, one product, loan, insurance, investment product. So there are too many products based on the bank, whatever they are providing a offer product. So next one, chain banking, which is nothing but the chain is extending, the bank is extending using a chain circle. So here meaning of chain banking, the chain banking refers to the type of banking arrangement in which the group of bank what they are offering. In the last slide you got to get more clarity. So which is often under the same ownership, the same ownership and control also they are carrying, okay, work together for providing a range of financial service to their customer, which is very quite similar to group banking. So objective of chain banking, the primary objective of chain banking are as follow. The first one, cost efficiency, because they can use, they can reduce the cost, and even the risk diversification, the risk can be diverted, okay, even the improved service. So when they are offering a product for the entire customers, okay, so they are offering a different types of improved service, okay. Now we are, for example, we are standing in the 21st century, we are using a online banking or digital banking. So enhance market presence, you can enhance your market presence, okay. And next, the scope of chain banking, the retail banking, which is suitable for the saving account holder, and corporate banking, which is related to businessman, okay, and the investment banking, which is either the individual person or businessman or anyone can be go for investing, even the banking also going for the investment. And wealth management, because there are too many whatever they're generating the wealth, which is nothing but your asset increasing or acquisition of asset. And the insurance, again they are trying to go for investing, for the offering a few product for the customers, for example SBI insurance, SBI life insurance, because the SBI is a bank, they are offering a insurance product for the users. Mixed banking. So the mixed banking refers to the banking system where bank provide both commercial and investment banking. See here, commercial activity as well as investment product also they are offering. In other words, mixed banking is a combination of the two types of banking service, commercial banking and investment banking. So here in the classification, the first session, you are well familiar with the commercial, what kind of activity, and even the investment what, okay. So the objective of mixed banking, diversification of revenue stream, okay, which is objective diversification of revenue stream, and the improved customer service, because you are providing a lot of facility for the customers, no. So that's what this particular mixed bank is more and more service they are giving. And risk management, because at the time of investing there is a lot of financial risk, okay. And the competitive advantages, there are too many competitions you can come or through, okay. And the scope of mixed banking, which is nothing but the deposit, wherever all the banks are accepting a capital, depositing and the loan providing, even this specific bank also providing, accepting deposit, lending a loan, and underwriting based on the insurance product or any shares, when they are deciding what is the premium, what is the share price which is going for the underwriting. And the merger and acquisition, in case of any company, A and B company, they are trying to merge together, so in that case also. And the advisory, now banking is giving a advising service to those needy people. And trading, even the trading, buying and selling, which is the primary market, and secondary market, which is completely based on the security and mutual fund, okay. And narrow banking, which is nothing but the narrow banking refers to the banking model where the banking restrict its lending activity to only low risk, because anybody, if they are asking a loan, you can't blindly provide the loan facility, you will find out what is the risk factor, okay, and highly liquid asset. Now most of the bank are providing a loan based on the highly liquid asset to whatever you are expecting from the customer, such as government security, cash equivalent. Okay, the primary objective of narrow banking is to ensure the safety and stability of banking system to avoid instruments that can be a lead to the financial crisis. So here narrow banking ensures safety because anybody are investing, they are first giving a priority for safety. So, and the stability of banking system, you need to stable in your operation. So highly, you need to avoid the maximum risk. At the time of selecting a best instrument, the scope narrow banking has a narrow scope. It is typically limited to the government security. Because the government security are 100% we are getting assurance or guarantee, and other highly liquid asset, what you are exactly finding a asset which is easily you can convert for the cash. It does not include lending a risk borrowing, okay, which is does not taking the responsibility for a risk borrowing or investing a high risk asset such as a stock and real estate, because the share movement, the speculation what you are identifying, so which is highly unpredictable. And the next, universal banking. See, universal banking refers to the banking model in which the bank offers and comprehensive range of financial service under one roof, because under one roof only there are too many services are offering to the customers. Okay, so here this means that the bank can be provide wide variety of financial product and service. There are too many products which is related to the customers are getting a lot of benefit from this whenever they are offering a more and more product and service, finance related product and service. Objective of universal to provide wide range of financial product and service. Wide range, because universal means you can reach for entire globe, right? So you can expect the majority of benefits the customer. To enhance the profitability of bank by cross selling different financial products for existing customer. Even the existing customer also, whenever you are introducing a new product which is related to insurance product or any investment product, of course the existing customers also they will get to know. And the scope of universal bank, retail banking which is related to saving account holder, corporate banking which is related to businessman, okay, and the investment banking you need to go for investing, and the insurance product basis, the wealth maximization, your wealth how you can increase, okay, and the electronic banking, because in the universal you are trying to operate in the within the different city, different country you are operating, so you are for selecting a right platform for electronic. Moving forward. So here offshore banking refers to the practice of individual or company opening a bank account and other financial account in the country, within the country, whatever they are opening, which is individual basis or company basis or operation organization that different from the country to country of residence. Okay, so objective of the offshore banking include, one is a tax optimization. Whenever you're opening a offshore banking, so in the different country, so you are getting a tax optimization and asset protection. You can get protection, 100% protection here, and diversification. You can divert. Okay, and the scope of offshore banking include banking service. What kind of service which is available for other banking? So same service, majority more service you are expecting here. Even the wealth management, you can manage your wealth. The company formation, at the time of company starting, the formation guideline and the capital formation, easily you can go get it. Keep on watch for next section. Thank you.